Happy Friday, traders. It is the 15th of December, 2017. It's 8:03 a.m. Chicago time. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market, as we sit here at this hour, is looks like Bitcoin is really strong this morning. I'm looking at the futures, 9% up 9% on Bitcoin, followed by RBOB, gasoline, and crude oil. Crude oil has rolled today to February, so make sure you re-download your data to get the continuous adjusted contract. Crude oil is up 0.6%, trading at 57.43. The premium on crude between January and February is very small. I don't know what it is, but it's maybe a couple cents. The E-mini Russell follows. Then gold's in there. Gold is interspersed among is sitting among the indices today. Kind of interesting. Trading at 1,262. The laggard today is the British pound, followed by the 10-year note. The market's allocating to risk this morning. We are trading inside of yesterday's range and value, and so we had a bigger drop off than anticipated yesterday by hypo 2 or scenario number 2 or trade idea number 2, and now we're backtracking. We've been drifting up all night on the S&P 500. Someone asked me, why do you keep covering the S&P 500? And quite simply, it is the most popular product on the planet. The S&P futures are watched and traded by more traders than anything else by far. And so that's why. It is not, and maybe some of you will raise your eyebrows here, it is not my product of choice. It's not my favorite product. I tend to not like products that are too slow, have tight rotations, very few opportunities. I come from a high volume scalping background, and therefore I tend to drift towards thinner products like the Russell, the DAX, and so on. And so, but I cover the S&P minis because even when I was trading equities, we always watch the S&P mini futures. It is the behemoth in the global economy and definitely in the U.S. And so it is something that I cover. I try to incorporate other products like I did yesterday, but I tend to run out of time. I'm working on revamping the entire broadcast so that it just knocks it and gets to the point real quick so I can cover more products, especially if Bitcoin futures start taking off. I think that's an interesting product to trade. It trades a whole heck of a lot like the DAX back when I started trading it in 2003. And it's very thin, high margins, but if you are coordinated, it tends to pay out pretty good. But of course, because it's thin and volatile, it is not suitable for everybody. Okay, so that's that. That's what I've got for where we are currently. We're looking at a release here at 9:15 Eastern of U.S. industrial productions for November, expecting 0.3%. And so that's the key thing we're looking for this morning. I don't see anything else on the calendar, and the reason I cover calendar events is because it does play into the context and hypotheses or ideas for the day. I don't cover the news anymore. Everybody can log into some sort of a news feed or website and get the news, so there's no point in covering it here unless that news is impacting us or will likely continue to impact us into the session. As far as what I expected yesterday, here's what we've got. Let me turn this off. Here's what we've got. Yesterday, the expectation was for the market to drift up. We did leave a poor high behind. We have a point of control near the highs. There's clearly a lot of interest by buyers near the highs. So if you have a point of control like this, near highs, the market consolidating near highs, and it's just not backing off. In other words, it's not just falling out of a cliff here. What that shows is that participation at the high is bringing in buyers and sellers. Otherwise, that volume does not exist. You cannot have volume without participation by two parties. And if those two parties are hanging on to and are trading actively at the high price, one of them is likely to be wrong on the next rotation. The market consolidates, rotates, consolidates, rotates, and even when it consolidates, it just rotates in smaller magnitudes. And so eventually one of those two parties is likely to be wrong. And the way this is set up like this, the way it's consolidating, the way the point of control is sharp and near highs, the likelihood is to break that weak high and continue higher. That was hypo 1 or idea number 1. And coming into Thursday morning's trade, the expectation was we're likely to drift and take out the all-time high at least by a couple points if that gets done, right? We have a lot of energy building up there. What it did is not this. This was way off. This is basically what it did. It went sideways, failed to push higher, and then boom, it released. But there was also news pushing this. There was an announcement that Marco Rubio, who's a Republican senator out of Florida, was not going to vote for the tax plan, and that's all the vote that's needed to end that and send it back for revisions. And so that came out, and we saw a big move down. And again, this political mumbo jumbo is continuing to drive where we're going because the market's expecting earnings to be impacted by lower taxes. So the market anticipate or has anticipated since last year's election the lowering of taxes. With lowering of taxes, you get better earnings. You get a market that is an earnings drive price in indices, okay? And so we had this move down, and my target for the move down was the naked point of control and consolidation zone around 2659, 2660. The market ended up moving all the way down into the 50s, which was a bit of a surprise. And I did talk about yesterday that if it does break to the downside, it's a better opportunity. And so here's what we end up getting. There's the open auction. I again warned that it's likely to be very choppy on the open. It was very tight. Look at these multiple tops. You got the opening swing high. Then we tested again more than 15 minutes later. So we have a double IB high. Then we tested again and we tested again. Not able to break that quadruple high. Well, it's a double top, but a local quadruple, I guess. And it just spills to the downside. Once it spills to the downside and starts to take out the opening swing low and the IB low, we have range extension to what's called range extension down. Essentially, the market is extending the auction down through the first hour's trading, which is where the bulk of the trading occurs. The OTF participation occurs. So what are we looking for next? Unfortunately, there's a delay to the broadcast of about 7 to 10 seconds, so I can't wait for your answer. I'd prefer for this to be more interactive. What do we look for next? Classic. Range extension down. Mid short. There's the mid. The mid is this blue line right here. That was the key opportunity for the day. If in my plan, if I missed, especially in this product, and that's why I like thinner products, in my plan, this would be the only opportunity, the only clean setup that occurred yesterday. So there it is, broke through the mid by a couple ticks, and then we have our extension down. The first target on the extension down on a mid pullback is the last low, which is at 64.50. Got that. And then you hang on for the key target for the day, which was 59.75. The market gets to 59.75 and hits it to the dot for a small 2.25 point rotation, and it just continues down. And this is driven by news. Okay, it's a lot of detail. But it's important for you to get a feel for where the hypothesis starts and where it ends up with an execution, and where the trade management, which is probably the second most important aspect of the trade, is how to manage it after defining risk. And once the trade is on, you've defined risk. Once the trade is on, trade management's all you've got. And so we end up with this consolidation at the low, and so we end up with this very strange profile. There is something that this profile is saying. Again, unfortunately, with the delay, I can't wait for your answer. It'd be boring, just a blank space. What do we have here? We have lack of consensus by the market. There is no distribution here that says that the market's accepting price. It did accept price near the close, but most of this occurred right at the close. And so we don't end up with a profile where people say, I like this price, I don't like this price down here. Okay, that's the normal distribution that you would see in your statistics books. And the first standard deviation of that distribution will be the 70% of the population. And that's what we call the value area. But yesterday, no consensus. The market is battling every price on the way down. Buyers are active and sellers are looking to push. We've got, how do we know they're looking to push as opposed to buyers backing off? Because volume occurred throughout the distribution. So there had to be sellers pushing for volume to occur on throughout the distribution, as opposed to it getting thin and the market falling on pretty much bids being pulled. There's a very significant difference between a market falling on bids thinning out, looking for better prices, and a market that is battling every price. And so what you end up with is no consensus, and then the market just sits here at the bottom into the session. The auction got cut off, and we expect a lower low on the reopen. So here we're looking for a lower low. We got that down at 26.51.75. But because there's no consensus, we're expecting the market to then retest this box. Okay, so as soon as the market gets up above the point of control and fails to push down through the point of control, we're looking for it to ride back up to 26.67 even. Excuse me. And it only got to 26.65 overnight. It's incomplete, in my opinion, on the squeeze of the shorts while the buyers battled all the way down. And so that takes us into, I know that might sound confusing, but it is how I see the auction. And so if we look at what it did overnight, there it is. And if we look at how it drifted, look at this, the way this is, the participation is on the overnight session, a complete drift. You could see the price action, the bid offer, and the prints just consistently pushing higher and higher until we get to this area where volume is stacked and is holding tight, and then it stalls out. It doesn't ever trade. I don't see any collisions in that area on a relative basis. And so the market just drifts. Remember that analogy of a ball that's being pushed underwater, an inflated ball that's being pushed underwater. A lot of force. The sellers put a lot of force to put their hands on top of the ball and squeeze it under the water in the pool. Okay, and as soon as that pressure comes off, what happens? The ball just drifts back up. And that's the market we've been in for the last 2 years. Okay, and that's what we see overnight. And it is incomplete. I expect it to ride all the way up to 67 this morning to retest this value area, which does not have value. There's room on the upside to test to see what kind of participation we're going to get. Double distribution on the overnight session. Volume's 188,000, but really it's more like 80,000 or so given the quad witching event today. Remember, again, today is Quad Witching Friday. Why is it called Quad Witching? It's not because there are witches on broomsticks flying around the planet today or anything like that. It is futures expiration, options expiration, options on futures expiration, and single stock futures expiration. Those are the four key products that are expiring today. And with that comes a lot of volume, and with it comes a lot of hedging and management, heavy management of large option positions and the underlying product. And the underlying product on a lot of these is the S&P 500 versus the OES options on the S&P 500 and so on. So that's what we have today. Anyway, I think I'm covering stuff in too much detail today. But on the overnight session, we're getting a drift up on relatively low volume if you take away quad witching and all the positions that have to be rotated and hedged. So we're not seeing very good participation overnight, but the action on price is pretty good, right? And so we've drifted up all night, and now we have a relatively strong position on the open inside of yesterday's value area. And if we include what happened yesterday in this profile, right, from the gap up on the 8th last Friday, so Friday to Friday, you could see it kind of filling in. And now what we have is a base, a potential base here. I expect this to be support. This morning I'm looking for an open auction that drifts down a little bit. I'm looking for an impulse up. I'm looking for it to flag. And then I'm looking for that overnight high to be taken out. I'm looking for this to consolidate into oblivion or the close. And so that's what I'm expecting today. Yesterday, I expected just 6 points on Hypo 1. Of course, that didn't happen at all. But today, basically, we're doing the same thing as yesterday, the same plan as yesterday, except down lower, 2662 versus up in the 2670s. Okay, and so that's what we're looking for on the primary trade idea for the day. What I'm going to fish for this morning is to lean against any size in the depth. So if we look at the market depth here, okay, clean this up. If we look at the market depth, it's fairly thin right now. But if I see that once we open, if I see a lot of white kicking in here and the market's hammering away on it and it's not able to push through, I'm going to look to lift the markets and then look for all those people hammering on the white, which is the bids, selling into the bids for them to give up once we push through. And then once we break this zipper up here, it's likely to push fairly quickly. And that'll be the key trade there on the primary scenario. The secondary scenario is we open and we squeeze up in an open test drive or an open rejection reverse. So it pushes down, rejects the overnight point of control, reverse, pushes up. We get an impulse up, and then it stalls out around the 65, 67 area. And then it just sits sideways, and then I'm looking for it to give that up and start moving down onto the close. I don't expect too much range here again, probably 8 to 9 points or so. It is Quad Witching Friday again. And that's kind of what's normal for this day statistically. That's about it. I'm not going to cover anything else. I'm way out of time. But I want to remind you, before you head out today, like it. Please find the like button and hit it before you head out today. It's important that you do that. It provides me with the services that I need when I need them. Please like up the broadcast so we can keep going strong. Let your friends know about it. Hopefully what you're getting out of this is Not just, here's what I said will happen, or here's what's going to happen, and it's just a prediction out of nowhere. What you're getting with this broadcast is, here are the pieces that are likely to impact us. Here's what we said yesterday. Here's what worked and didn't work, and that's important, the didn't work part, the failed plan and the failed trades. Here's where we are today. Here's what we're expecting today. And then we come back tomorrow, review that. And basically what you're getting is what is normal and what you would expect to get in a professional prop trading environment. We don't just say, oh yeah, plan, it didn't work out, oh well. We look at how things, the fact that a trade doesn't work out or a plan doesn't work out, it's important information. It's important information at that moment in time. So you're getting a very comprehensive view stuffed into 15 or 20 minutes. Good luck, and again, hit like. Take care.